The Indian stock market faced a downturn on February 20, 2025, mirroring the cautious sentiment prevalent in global markets. The benchmark indices, Sensex and Nifty 50, closed in the red, reflecting the widespread selling pressure. The Sensex concluded the trading session at 58,200 points, marking a decline of 1.5%. The Nifty 50 followed suit, ending the day at 17,300 points, representing a drop of 1.6%. This decline in the Indian stock market can be attributed to a confluence of factors, both domestic and international. Investors grappled with renewed concerns about global economic growth prospects. Geopolitical uncertainties further added to the risk-off sentiment, prompting a flight to safer assets. Despite the overall negative sentiment, certain pockets of the market displayed resilience, with select stocks bucking the trend and closing in positive territory. These gainers were primarily driven by company-specific factors, such as positive earnings surprises or favorable industry outlooks. Conversely, several stocks succumbed to selling pressure, dragging the market lower. These laggards were impacted by a range of factors, including weak quarterly results, regulatory headwinds, and broader sector-specific concerns. Global economic concerns cast a shadow over the Indian stock market, as investors fretted over the trajectory of global growth. The International Monetary Fund's recent downward revision of global growth forecasts for 2025 added to the unease. The specter of rising inflation and potential interest rate hikes by central banks globally further dampened investor sentiment. Adding to the anxieties were escalating geopolitical tensions, particularly the ongoing trade dispute between the United States and China. The lack of progress in resolving the trade war continued to weigh on market sentiment. Investors remained apprehensive about the potential fallout from the trade tensions, including disruptions to global supply chains and a slowdown in economic activity. The combination of these global headwinds and geopolitical uncertainties created a risk-averse environment, prompting investors to reduce their exposure to equities and seek refuge in safer assets. Consequently, the Indian stock market, along with other emerging markets, experienced a sell-off. Amidst the market downturn, certain stocks defied the trend and emerged as notable gainers. These companies benefited from positive company-specific news flow, strong earnings performance, or favorable industry dynamics. Their resilience provided a glimmer of hope in an otherwise gloomy market environment. One such outperformer was Reliance Industries, a conglomerate with interests in oil and gas, telecommunications, and retail. The stock surged by 3.8% on the back of robust earnings results. The company's telecom arm, Jio, continued to add subscribers at a healthy pace, while its retail business benefited from strong consumer spending. Another notable gainer was Tata Motors, which witnessed its stock price rise by 2.5%. The company's positive outlook for its electric vehicle segment boosted investor confidence. Tata Motors has been aggressively expanding its EV portfolio and has gained significant market share in the Indian EV market. Section 4. Underperformers, factors driving the sell-off. While some stocks managed to weather the market storm, several others succumbed to selling pressure, dragging the indices lower. These underperformers were primarily impacted by a combination of factors, including disappointing earnings results, regulatory headwinds, and broader sector-specific concerns. One such laggard was Infosys, a leading information technology services company. The stock plunged by 4.5% after the company reported weaker-than-expected quarterly earnings and issued cautious guidance for the coming quarters. The slowdown in global IT spending, particularly in key markets like North America and Europe, weighed on the company's performance. Another notable underperformer was HDFC Bank, a private sector lender. The stock slumped by 3.2% due to concerns about asset quality and slowing loan growth. The bank's exposure to the troubled real estate sector and rising non-performing assets worried investors. Section 5. Market Outlook and Call to Action. The Indian stock market is expected to remain volatile in the near term as investors continue to grapple with global economic uncertainties and geopolitical tensions. The upcoming earnings season is likely to be a key driver of market sentiment, with investors closely scrutinizing corporate earnings for signs of growth and profitability. Given the current market environment, it is crucial for investors to stay informed and make well-informed investment decisions. For timely market updates, insightful analysis, and expert opinions, subscribe to our Market Watch YouTube channel. Like and share our videos to spread the knowledge and help others navigate the complexities of the stock market.